Okay. Oh, okay now. All right, welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders stationed around the world, synchronizing our watches, coordinating our satellites. Teach us about future interest rate environment, how far Fed will go, 20 or just 4%, who will be... Okay, Mr. Zangham. Yeah, we'll do that too. So anyways, thank you for being here. Thank you for being a subscriber. If you're not, maybe you should subscribe. You'll be alerted to these videos or the live streams. I mean, you might just be watching a recording and you're like, oh my God, this was great. Well, if you're a subscriber, you can attend live and actually ask questions like Mr. Zangham. Pretty interesting, right? So anyways, thank you. Thank you for your positive energy. Thank you for your hard work. Thank you for your professionalism. Thank you for all you do. So without further ado, I have a poll going. What should we start with today? Pound yen, Bitcoin dollar, fundamentals, or pound USD? Please fill out the poll, the survey. 3, 2, 1, let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So yes, my name is Wayne. I've been doing this for close to 20 years. That's longer than YouTube has been around. That's longer than Amazon.com has been around. That's kind of interesting, isn't it? And out of those 20 years, I've rarely missed a day. So it shows you the dedication, maybe not that Forex requires, but my dedication to you and my desire for you to be a successful foreign exchange trader. It takes technical analysis, fundamental analysis. You got to have the right trader psychology. And a lot of that comes from experience. So I think in my book, I describe I use the analogy that I'm that beat up, scarred up, been shot and stabbed a million times, non-com, right? Non-commissioned officer that just somehow doesn't die. And you got to learn from this guy. And I think in the book, I say, you show up in the jungle or in the desert, and they're like, you don't need this, you don't need that, throw that away, keep your socks, right? It's all about the socks. So anyways, let's talk about you surviving first and then thriving second. Also talk about an FX Bootcamp credo. The number one goal is not to do something stupid and get yourself killed. The second goal is to do whatever it takes to achieve the mission. The third goal is to win the war. So to reverse that and get rid of the military analogy, what's the number one goal in Forex? Don't blow up your trading account. Second one is try to earn a small return today by taking trades that are not risky. And the third one is make enough money as a Forex trader to quit your job and be a Forex trader. Okay? Peace. So anyways, think about it that way. So ask questions, get involved, whatever. We went through the calendar earlier today, or earlier in the week. As you know, we had the New Zealand interest rate decision was a big one because the market was set for them to raise interest rates, except the government just days before the announcement shut the economy down for COVID. And so the central bank changed its mind. it makes sense, but that was a shocker. Well, not a shocker, but it happened. The second thing is we had FOMC meeting minutes, right? Right? That happened yesterday, and here it is Thursday, the greatest trading week of the year. Sorry, the greatest trading day of the week. So we're looking at already next week is what's going on now. Okay. So the big question of the day is, have the big moves, and there's some big moves last night, starting in Asia, have they run aground? Or do you think it's going to continue for much longer? So we'll take, right? We'll take a look at that. I'd like to thank Traders Away for being part of our community as well. You're a currency trader. They're a foreign exchange broker. You're going to need one. There are many. So how do you choose? Well, you just might say, well, I like that guy. That's what he uses. That's good enough for me. That's how most people choose a lawyer, by the way. Right? You choose your divorce attorney because your buddy used that divorce attorney. Right? Your grandma slipped and fell at Walmart and broke her hip. You use the Yellow Pages. But you don't, right? So anyways, that's not deep research. So one is advertising. The second one is referral. So I'm referring you. I don't make referral money. Like I don't make a commission if you open up an account there, by the way. So anyways, I'm referring you. Or you can say, well, I've done my research. I like the fast execution speed. I like the narrow spreads. I like the big swaps. Sweet. Go with that. But no matter what, you need to start with a demo account and find out for yourself. So do that today, huh? Tradersway.com. These webinars do not cost you money, but they come with a cost. And that is you're obligated to visit Tradersway.com and open up a demo. Andrew is like, hey, is the Afghanistan Taliban crisis, is it influence for $1? No. No. It's a humanitarian disaster at a governmental clusterfuck, pardon my French. But that, dude, I don't know what they were thinking. Yeah. But is it going to affect the dollar? No. It won't even affect heroin prices. So anyways. All right, so we have a poll. 52 people have contributed to the responses. Would you please answer whether you want me to start with pound yen, pound dollar, Bitcoin dollar, or fundamentals? Mr. Sangham says, hey, for trading psychology, you recommend behavioral finance. Yeah. What about spirituality? Is meditation enough? So I meditate every day. So is that the answer? I don't know. But stress is going to be a part of our career. That's just how it is. Emil says, and if Joe Biden's going to be... Don't even think that way. It just won't make you money. Okay? It's the same thing like, I don't know. There's so many things. Just don't think that way. All that matters to us guys is the flow of money. So you might say, well, will Afghanistan change the flow of money? No, it won't. I don't know. No, the answer is no. It's just, it's not big enough. Okay. If you shut down the entire Australian economy and they stop producing iron ore and coal and gold and diamonds and stuff like that, oh yeah, that'll affect the Aussie dollar for sure. All right, so I'm going to end the poll here. Okay. So just to finish with Mr. Sangham's question, is meditation enough? I think the only way to address the stress of being a currency trader is over preparation. You're so prepared that you know you can handle what's being thrown at you. And also like the discipline to say, I'm a bull, but this market's crashing, so I'm not in the market. And I bet you that's where some of you guys are struggling right now. Right? So like I talk about seasonality, and I'm like, hey, typically the dollar and the yen weaken starting the third week of August. But I also describe it, right? I also describe it as a farmer planting and harvesting and doing those types of activities. And, you know, he plants in the spring or she harvests in the fall. And I say, well, you know, you should show up the third week of August ready, willing, and able. And you show up to your field and you just start harvesting. And someone's like, dude, why are you harvesting today? Wayne said this week would be the time to harvest. And I'm like, dude, no, starting this week, you walk your fields. You check the plants. You ask Google for like, what's the 10-day forecast? You don't want to go out in the field and it's going to rain the whole time. But you know it's time to get ready for harvest, right? You should be hiring your workers. You should be, the maintenance on your equipment should have been done already. You should be tasting the grapes. But you don't just show up, boom, harvest, August 19th every year. It doesn't make any sense. So you got to be careful. And so like, I think on the site, going back to Mr. Sangham's question on psychology, I wouldn't be shocked if some of you guys are walking into your fields reaping and getting doused by Hurricane Fred. I got 5 inches of rain 2 days ago. And if you don't know what 5 inches is, it's like 11 centimeters. That's a big 24-hour period, right? So you're like, dude, why are you out there in a hurricane? It's raining, there's wind. You're like, well, Wayne told me to harvest the third. No, I didn't, man. I said, be ready, willing, and able, right? So anyway, so that psychology of you want it to go up and it's going down. How do you behave during those situations? And of course, if you're trying to force your trades, your bullish trades into a bearish market, you're ignoring the whole job. You're ignoring the whole thing. Okay. Yeah, Mr. Peckery says that's applicable for university exams too. If you're over-prepared, there's no need to stress. Well, I try to teach my kids that you only show up to take the exam to get your grade. Same thing like in preparation for contests. So they're not athletic kids. I tried when they were little itty bitties, but they've done things intellectual like Science Olympiad and robotics teams, right? So for years and years and years they did robotics. Years and years and years they did Science Olympiad. Both my kids are state champions in different categories, like the best in the entire state of Georgia, thousands and thousands of kids. But what I taught them, and I was a coach for one of those teams, I taught them that you're so over-prepared that you only show up to the competition really to be an inspiration to the other teams and to collect the trophy. But the winning is the practice, right? So I have a t-shirt too that says, act like a champion, but you can see just the faded letters around act like a champion. It says practice like a champion. So that's truly it, Peckery. It's like you're so over-prepared and you know so well what you want to do and you have the patience and discipline to do it, then the fear is at least addressed. I don't know about removal of fear. I don't think that'll ever go away. That's dangerous. And I've talked about that, about my friend in the military that had to retire because he literally had no more fear. And that's when you get killed. There's a reason why, when you have a knife in your leg, it hurts. It says, warning, warning, okay? You need to do something about this. You need to address this. So fear is there, but I think you can learn to harness fear and use it as a tool and not so much as a major threat, because it's there for a reason. Okay. Okay. Theta says, will the Delta variant have an economic impact on the U.S.? And by the way, I'm addressing 48% of people that voted for fundamentals. So I'm addressing these questions to start out. So thank you. Yes, if people stop shopping in person, if people stop flying, if people stop eating in restaurants, if people stop going to hotels, yes. But then again, people will still buy stuff on Amazon. So the answer is yes, but to what degree? Okay. Another way of looking at it is, so like Australia and New Zealand are lockdowns, right? Will that impact the economy? Yes, and probably, I don't know the future, but probably not positively. It will probably not have a positive impact. So will it slow GDP? Probably. Okay? Probably. Okay? So from that, you make decisions. And you will see that, do I even have a Kiwi here? Well, we'll use Aussie. Okay? Okay? Remember, Aussie, our summer here in New York is Australian winter. And it doesn't look like things got better this winter in Australia. We're right now 2 standard deviations from a mean. Cool, right? Okay. What we want to do is look at a change. So indicators, custom, price action pivot points. Okay, now we have congruency, right? My price action pivot points are pointing straight down. And from our analysis of June 1st, the beginning of summer, and remember, this was the key point where I said everything's going to change. And I gave you permission to shoot at rabbits, to be a bull or a bear. Okay? But anyways, here we are now, and we see there's clearly a downtrend, right? Right? This is M. There's a negative slope to M. This is 1 standard deviation below M. This is 1 standard deviation above M. Okay? And M is equal to rise over run. Great. So that's a negative slope. But now we're looking at a different part of, a data set is what they call this, right? Here's the main data set, and here's a sub of the data set. And what we want to see is, what if it changes direction like this on the shorter run? And what do you anticipate that means between now and the end of the year? So I don't know if that's going to happen. So if you were just looking backwards, okay, if you were backward only, which is mostly technical analysis, just try to using patterns and past performance to predict future results. So you would probably think something like that. And the thing with technical analysis is you keep doing it until it doesn't work, and then you change the other direction, right? So over here, we were definitely buyers, and you would have bought this, and then this would have taken you out and turned you into a bear, and now you would have been selling, these moves. So the question is, do you anticipate a change in direction? I don't know. And maybe you don't need to. You do this until that fails, right? You keep shorting until it fails. And you know that this is the area. Okay, that's technical analysis. Okay. Oops. So Mohammed's like, but what if the market has already done that turn and we missed the moves? Well, if you're a pure technician, okay, you wait for the next opportunity. Remember, if you're a bear, you simply sell the lower high. It's not that complicated. What most people that fail do is they don't do that. So you do that, okay? And you're like, but what time frame? Well, how about there's daily pivots? There's weekly pivots. Monthly is probably too much, but monthly. Maybe even market opens where you're watching the behavior of a day trade, right? Okay, but I kind of catch both of those with day trading. So you do that. But do you think if I told you out of the last 20 years, 82% of the time, Aussie yen goes up between October and January 1. If I told you that, I'm not saying that's true. Okay, but if I told you that, would it impact the way you think about this? Now, it's a little dangerous, isn't it? But the answer of course. So this is way down. But then you're like, but wait, I got this knowledge that I need to somehow incorporate. So if you have that knowledge, then that's what you would be doing, is you would say, well, I can't buy it down here, but how could I buy it? And the question is, do you think this way? So I would build a macro fund. This is different from you just day trading. And you're like, but what's a macro fund? Well, imagine there was an ETF. And the ETF said it's going to buy stock from many countries, from China, from US, from Europe, from emerging markets. Okay? And it's also going to do it based on its impact on the stock market, impact on energy. So they might be producers, explorers, pipeline distribution, maybe even retail. And it'll say, okay, so now it only buys stocks in multiple markets around the world. And the stocks of these companies are the whole upstream, downstream supply chain, from walking around Earth looking for new supply of oil to drilling it out of, sucking it out of the ground and then transporting it somewhere to be, refined into a product and then at some point even sold. Okay? That's very specific, isn't it? Well, what if you said you were going to develop something like that, and the only thing you're going to be buying is currencies and commodities okay, that are positively impacted by global growth. So you get this situation where, is China today doing good? Is Australia today doing good? Is Canada today doing good? Is Germany today doing good? So on and so forth. And the answer is, well, there's today, but what about the next 12 months? What about the next 3 years? Different answers. So if you say, well, it's been a bad week for the euro and an okay week for the pound. Okay, great. But if you thought about it as let's say a 3-year plan, you would say, well, I'm analyzing things, and I understand with like the lockdowns in Australia and New Zealand and some concerns about, regulation in China and some concern about tapering in the United States. These are all very good points today, maybe even the next couple of weeks. But 3 years from now, we're not going to be talking about will the Fed taper. Right? Like I mentioned the other day, you should be thinking about ADR stocks in the United States are down 50%. If you bought Alibaba at half price in 3 years, will it be profitable? Well, you're going to have to think about it differently than what will it do today, right? It's not a meme stock where you buy it and it goes up 10% in a day or down 10% in a day, right? So I want you to think about how would you behave, because I'm also addressing psychology, okay? Where would you behave or think or even feel differently about the markets if you had that bigger strategy of saying, right now you're staying out of the way of this because we're having a global contraction and growth, some of it being that we're coming up to a change of policy at the Federal Reserve. We know that that's key. I'm not trying to underplay that. That's very key. And I think most participants are quite wrong on what they think the Fed's going to do. Now, maybe I'm wrong too, but nonetheless, I think people are quite wrong on the short run. But on the long run, we're all correct. The Fed will taper. Interest rates will go up. But you're thinking the next 5 hours, you could be thinking the next 5 weeks, next 5 months, and then just say, well, how do you track all that? And that's the same. That's like fractal geometry of like comparing a 5-minute chart, right? So I was trading pound yen last night on a 5-minute chart, but I was also looking at a 4-hour chart, but I could look at a weekly. And you're like, well, I might be short here, neutral here, and long here. Okay? But now I'm saying you could go daily, weekly, monthly, and look farther out and say, well, what do you think the future is? And then try to build something more than day trading. Okay? Okay? That's all. But here's the other thing, and I'll show you pound next. Okay, this right here, let's do the basics of swing trading. Let's do this in a different color. This top predicts this bottom. So we're only at 78.5. This chart, I look at it and says, oh yeah, this is going down to 77. We already knew that. Right? There was two situations. This was going to take us here if you were a bull. That takes us here if you're a bear. That's the chart. That's what it says. That's what it says. So if you're psychologically being slaughtered right now because you're like, oh my God. Well, I'm like, just back out and look at the basics here. That's what that says. Bulls are thinking double bottom, take it up to 84.5. Not 85, 86, 84.5. That's what it says. It doesn't say anything else. And bears would sell it here and take it down to 77. That's it. Only one of those two things was likely, or at least plannable, strategically. Okay? Mohammed says, I'm trading in the opposite, technicals first and then confirmed by fundamentals. That doesn't make any sense. Makes no sense. Okay? So it's the other way around. You can say you are a long-term bull, but right now this is bearish. So you're selling until you're bearish. Now, the way that I have advised people over the years to handle that, if you're like, let's say short term, meaning this week, this week, today, let's say for this week, maybe even next week, you're short term short. You're a bear. Short term short. Okay. But based on your fundamentals, you're long term long. Okay. How do you handle this? Okay. How do you handle the dichotomy here? Okay. What you do is on the way down, you're doing things like 33.99 OCOs. You'll risk 33 to make 99. Okay? But once you get a reversal, you're probably going to do like 333. So you're basically day trading down and swing trading up. Okay? But you have to have an understanding of why you're swing trading, and that would be fundamental. But I have no problem with pure price action. But the thing is, what I don't want you to do is day trade down and then day trade up, and then you're not getting any capital accumulation. Okay, you have no capital appreciation. You're basically a factory worker. I want you to own the factory. Okay? Okay. Now Theta says, hey, but the market should be efficient in the currency market, right? Should be efficient as the decision's been taken to move it from place. No, I don't believe the market is efficient. Okay. Kevin says, now just trade one way. Well, that would be fundamental. But like Kevin, in the summer, for example, starting June 16th to July 1st, you should be trading without bias. That's what I was telling you guys, right? Without bias. I'm like, there's no fundamentals. The market has half as many, maybe even less, half as many as market participants. We're not trading, big global trends. There's nobody trading. So in this way, look, if it's bearish, you're a bear. Okay? Now, what we don't know now is that the global trend will come back. And does that change this? Well, technically right now, nothing's changed. So a bear would do this. That's what a bear would do on Aussie yen. Makes sense too, because I know Japanese yen typically doesn't weaken for another 5 or 6 or 7 weeks. It could weaken soon, but it would be early. Okay. I also know that Australia is locking down its economy. There's serious COVID concerns because it's winter in Australia. That's when things get bad with COVID. Okay? Everybody's locked up in their house because it's only 20 degrees Celsius. It's freezing. I had to put a sweater on, right? So anyways, it's right. So COVID's bad. So should you be buying Aussie yen right now? It's kind of hard to justify. Fundamentally, I understand why it's coming down, but can you justify to buy this? Why would you buy that? It's down. Now, you can try and you can throw some small trades in here, okay? But ultimately, that's not in the training program, is it? Find a lower low and buy it. That's not in the program, right? So Theta says, so what I just said is that Europe and America this winter will be the same as Australia. Yeah, we're probably going to get clobbered. But in America, we're going to get our third shot. Okay? But yeah, Europe's going to get clobbered for sure. Yeah, Peter's like, hey, 20 degrees Celsius is summer for us in the Netherlands. That's funny. Okay. So, wouldn't this be more interesting as a bull? Either this or that. So if the United States gets shut down in the winter, would it be make the US dollar stronger? Probably. The only thing is Europe will probably shut down, but the United States probably won't shut down. Okay? The way I look at it is 50% of Americans are vaccinated. And the other 50% that are not vaxxed, so I'll label this vax, not no vax. Okay? What's happening this summer? People are traveling. Dude, I've been to like multiple cities, right? I've been multiple airports. Okay? Have you ever walked through O'Hare? Have you ever walked through LaGuardia? Do you know how many people I've been around recently? Okay? Now, I stayed away from Grand Central Terminal, there's no doubt, but still, been around a lot of people. And I'm vaccinated, okay? But how many germs have I been exposed to in Wisconsin, in hanging out in crowded restaurants in Florida? So I've been around exposed to a lot of different people. So if I wasn't vaccinated, what's the chances I've been exposed to it? By the way, as soon as I got back from New York City, I walked in the door to my house and took a COVID test. Just so you know. I left my mask on. I hugged my wife, left my mask on, took a COVID test, and I was fine. Okay? Interesting, right? That's how the Wayne do. All right. So, but if you're non-vaccinated, walking through life, what's the chances you'll be exposed to COVID-19? I'd say pretty high. Probably for sure. So I'm thinking there's those that are just never get sick. I'm usually one of those guys. I never get sick. Okay? Then there are those that get it, but they don't even realize they have it. And the body responds and creates the immune system, and it's all good. Then there are some that get a little bit sick and they take a test, or they don't take a test, but they got COVID and it's like a flu. They're like, oh man, this sucks. 3 days later, they're up and running again, but they're immune. And then, of course, there are those that really get sick. Okay? And then, of course, there are those that never get exposed. But I bet you that, not bet you, but my thinking is, if this is a global pandemic, the chances of you, if you leave your house, okay, and by the way, people in America that are not vaccinated, they leave their house because they think the whole thing's nonsense. Okay? So here's I guess my guess is, I'll use that. My guess is that this 50% is, right? This 50% that's unvaccinated is getting vaccinated naturally. Or they get sick, they go to the hospital, boom, they get vaxxed. But so when you hear on the news 50% have not been vaccinated, I think what it is 50% have not received the vaccine shots. But this number, so Maida's like never had a shot, but she's got antibodies. Yeah. She's a social person. It's a social disease. She's been, exposed, and she's healthy. Okay. So anyways, and now we're going to get third shots. I'll do the third shot. That's fine. But, well, Luis, yeah, but there was a question about it, right? The question, Luis, was United States versus Europe this winter. Will there be lockdowns, and will that impact the economy? The answer is, I think Europe is just slow. Like, they were so slow to respond to COVID in the first place. So that I'm just like, so Europe, probably be negatively impacted. I think the United States handled it differently, and I don't think they'll get shut down. So, but it's a guess, right? So in that case, will there be a mad dash for the US dollar? Maybe, but I hope not. Okay. Okay. Anyways. Well, Sweden's Nordic, Robin, right? Not European. You're like, wait, you can't say that. Hey, Nordic countries are different, man. Okay? Vikings do not get sick. So anyways, that's what I was doing, Luis, as we were talking about Euro versus USD this winter. Will they be negatively impacted by COVID? Well, those are my thoughts. Euro probably, US dollar probably not. And then I explained why. Okay. But I don't care about the politics of COVID-19. I just don't. All right. So let's take a look at commodities. Mohammed says, so when would you change your bias? I know the Fed is still bearish on US dollar. Now, I don't know where you get that last part. So I don't know what that, I don't even know what that means, Mohammed. You know the Fed is still bearish on dollar. I don't even know what that means. So, yeah. So there you go. There's my thoughts on that. Okay. All right. So here's, once again, our trade plan from earlier. Okay. Stabilization, buy the dip. Up, 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 buy the dip. Up, 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 buy the dip. And right now, we've challenged it once, but this is the real deal here. Can we breach 1800? Okay. Cool. Okay. This is good. This is good. I like this. Dude, we were just at 1700. Now we're testing 1800. The interesting thing is, by the time this gets to 2000, a lot of traders will say, oh my God, I should have bought it down here. Why did I miss it? Well, if you're a bull, you're probably missing it. You're watching it and you're like, well, this is happening and that's happening and the Fed and this, that, and the other thing. That might be true. But look, okay, are you on this? This would be positive global macro. Remember when I read you the IEA report that said global growth will be up. I explained it. Yes, they say specifically for energy, but I say global growth for everything, including gold. Okay? Okay? And the interesting thing here is you might have too much oil in supply. Do we have too much gold in supply? No, gold is basically fixed. The supply of gold, we've already pulled 99% of it out of the ground. So its supply is fixed. So you got this situation like this where supply is fixed. So we'll do S star. And demand shifts from demand 1 to demand 2. And if there's an increase in demand, then the price goes from P1 to P2, right? Price goes up. Okay? And this is quantity demanded. So you have to do this, and then you do this. So Q1, Q2. Okay, so if quantity demanded goes up, so quantity demand, if demand goes up, then price goes up and supply is fixed. There's only so much gold. Okay. So anyway, so that's kind of unique to gold. So you know, look, if this is what you're thinking, you need to be thinking or acting. And this big move here triggered a lot of this. Okay, which also tells me, and I explained this way back then, that there were orders waiting to buy this at 1700. Okay, the market crashed. People got out at 18. So they sold at 18, bought it back at 17. Okay. Cool. Okay. Mohammed, the difference between efficient currency or efficient markets and non-efficient markets, yes, I believe people are rational and they try to make an efficient market. They try. And most of the time it is. But then all of a sudden it's not. You can't have an efficient market that's efficient 95% of the time, but then crashes 5% of the time. And what happens is fears build up. Irrationality builds up, and then there's a snap. And it's usually fixed around things like the Fed decision. And remember, the Fed is really clear. They've been very, very clear for years. And that the market has always debated, what are they going to do next? When are they going to do it next? How much? But the Fed literally tells us, clearly tells us, but people don't make rational decisions. The June sell-off was not rational per se. Okay? There's been a lot of overreactions because a lot of people are betting. They're also very afraid. Like there's just fearful money. Right? So it shows that it's not efficient. That's all. All right. So anyways, let's move on. .com. Oil. Let's do oil now. Cool. Okay. Big move down on oil. What do we know? Okay. This open is this target. So I have to back out here. Let's just do it by going to a 30-minute. Okay. Okay, let's back out. The beginning of the month, there was an entry here. The target is here. So that trade is now done. That trade is now done. Okay? So it's what happens next that matters. If I was a bull on oil, should I buy it down here? You could counter trend, or you can trend. What's the difference? Counter trend is buying an asset while the market is in a downtrend. Okay? I don't like that much. The next one would be, okay, trading a change in trend. So, right, a counter trend occurs, in this case, a bullish counter trend. Well, what you're doing is bears that sold here, okay, this is their exit. So the first part of this move is you trading and hunting the stops. Stop hunting. Okay, it's cool. You could do this. It's a little more dangerous, but this is what, if you're doing it on a 5 and a 15, let's say, you can certainly throw down some counter trend trades. Okay, but that's the short-term long, not long-term long. The next one would be the role reversal. Okay, and so let's say this goes from 63 to 67, back to 65, and then you buy it, and your target is 80. Okay. You're not like trying to pick up a couple of bucks. You're going for 10, 12, 20, you're going for 100, right? Like there's a difference psychologically. There's a difference strategically. Okay. And tactically, the way you handle that is you drop into a small time frame. Now, the most patient of traders would say, this is a bad place to buy. So it's a bad buy. Okay? But it's also a bad sell. And the reason it's a bad sell is this is where bears are supposed to exit. And you're like, well, I don't use pivots. Okay, then it's not a bad sell. You're going to be a momentum trader to the downside. Okay? So in that case, like, for example, we can do it this way. Indicators. Okay? Cool. So you're a momentum trader, right? Cool. So what are you going to do next? That's it. So what are we, 63 here? I think 64 would be too early, but somewhere between 64.50 and 65.50 would probably be your sell. But really, it's up to you. You could use the moving average. You can kick it off the 21. So let's zoom in even closer. Okay. You might measure it. If you're very aggressive, you're going to measure it from here to here and say this 21 is going to meet up with you at 64. So yeah. So insert indicators, custom, zero lag moving average, shifted on the 421. Okay. And this has it here even lower. So what this is saying is this. Okay. And it's also indicating that in the future, this 21, which is lagging, remember, it's going this way, but it's also going this way. So what will happen, this indicator, okay, is saying this in the future will be here. And so as a bear, you'll say, I'm going to sell it off the future 21 that hasn't happened yet. And tomorrow you'll come back and this 21 EMA will be here and you'll, right? And by the way, if you've ever asked yourself, like you're using moving averages and you're like, man, why didn't I sell that? Why didn't I sell that? Oh man, that was such a good trade. How come I didn't sell that? Well, it probably didn't exist at the time you were looking at it. That's why you need to look, right? Right? You have to look forward. These are lagging indicators. Okay. Mohammed says, why am I not creating a signal channel? I don't know. You want me to do that? Why would I do that? Okay. Okay. The algorithms are too strong for most to manually compete against. Forex is like a casino. You will never beat the house. I don't even understand that, though. Like, what do you mean? Like, it's a downtrend. Don't worry about the algos. Are you selling it or are you not selling it? I think there's plenty of opportunities for algos and high frequency traders and hedge funds and retail traders and hedgers, and like, it's not like $6 trillion a day is not enough for us. So yeah, I don't buy into that kind of logic of, that the algorithms are too strong for most to compete. What do you mean compete with? Dude, it's a downtrend. Sell it. There's no competition. It's like floating in the ocean. You caught a current. The ocean doesn't care how many boats are floating on the current. The ocean's going to go where it's going to go. The trade winds are going to go, right? The wind will go from Africa to Brazil. It doesn't matter how many sailboats are on it. And it doesn't matter which sailboat's the fastest. That just doesn't matter. So like, that's that. Like, we're sailing on a current of money moving. That's why it's called cash flow. It's literally flowing like water. Okay? Cool. Cool. All right, so what do you guys want me to cover next? Let's see. Let's do another poll. All right, we have 2 votes. We have 23 votes. Remember, you need to have more than 30 to be at a reasonable sample size. Ba-da-da-ba-ba-da. Okay, any last voters? Any more voters? Last chance. 5, 4, 3, 2, 1. Okay, cool. We will continue with dollar. Thank you for voting, everybody. Okay. Here we go. R1. Okay, this is monthly R1. Okay. Here's the weighted mean, deviations, but check this out. Do you think they're related or that's a coincidence? That this top is resistance. Well, that's what the math is doing, by the way. Now, it's not quite equivalent because here's what the math is doing. Because the central pivot went up, it pulled the low, right? Like it pulled, it moved, right? So anyways, what we're looking at is this is considered resistance 1, and this is considered resistance 2. Support 1. Okay. And it's pulling things up. And typically what you do is you assume the higher high if you're a bull, or you assume the lower low if you're a bear. Okay? So you're like, but what does that mean? Well, that means, let me do some coloring. Okay? If you're a bear, you don't believe it's going to make higher highs. You believe it's going to make lower lows. So it's going to go up, but it's not going to double top. And it's certainly not going to be a higher high. And you've done this through your analysis. Okay? And it's your best guess. Based on your research, you're like, you think it's a bear. So it's going to not make a higher high or double top. Instead, like a Fibonacci retracement, it's going to head down and make a lower low. Okay? And that's what this is. So all of that is for bears. Cool. So you need to do some research and decide which one are you, if you're a bull or a bear. Cool. The opposite is on the green side. If you are a bull, you are going to buy a dip, and when you buy a dip, it will make a higher high. You see that? What it won't do is make a lower low. There's a difference between a higher low and a reversal, right? So what we're looking at here is a buy zone. Buyers believe, and some of the belief system has to do with this move in the central pivot. Okay? And so therefore this green zone predicts up. Okay? And their target is up here. That's it. So they will continue this process. Okay? They will continue doing this until they hit that target. That's what the bulls are. So what if you were a bear? There's only two choices. Okay? There's only two choices here if you're a bear. There's a double top, or there's the bullish exit counter trend. You see? There's only two choices, plan A and plan B. There's no need to stress. Robert says, weak oil, USD CAD up. Yeah, but what if oil now goes up from 63 to 83? Well, then now is your moment. So Grind says, so front run now or wait? Well, it's both, right? So you have to, you're not worried about selling at 129 or 130. Dude, you're not going to get that today, right? So we're here today. So what's the day trade? The day trade is drop into a smaller time frame and sell a reversal pattern. Okay? And at what level are you going to consider resistance? Well, how about the resistance pivot point? And that's right where you are now, 127.50. So your trade plan, by the way, yesterday, should have been, if this is up there at 127.50, I should look to sell, small time frame, right? Enter a sell if I see a reversal pattern at or near 127.50. And that will probably happen or not happen today. And if it goes up further, well, now you're really like 129 to 130. You're just going to change this, right? And say, well, somewhere up there, you're going to look for a reversal pattern. And the logic here isn't a double top. The logic is an exit. So you'd be stop hunting, which means you would do small trades on the way down. Small, not necessarily lot size, but small meaning profit target. And the real trades, the big trades, are the ones after the reversal. Remember, hitting a pivot profit zone is not a reversal pattern. It's just stop hunting. So you're scalping. You're forcing slow and weak traders out. And the next one is when the market reverses and turns bearish. Now you fire for effect. And you're not going for smaller trades like 50 to 100 pips. You're going for, 300 pips. Okay. So you're day trading down at first, but then the next thing is you're swing trading down. And then even position trading after that, if you have seasonality behind you. And the difference between a swing trade, so you might be in a swing trade for what, 4 days? But a position trade, you'd be in for, I'd say a minimum 4 weeks. Okay, but really sometimes 12 weeks. Okay. And to know that, like to be in a trade a whole quarter, you're going to need to know seasonality. Okay. Okay. Well, so Grind says, hey, I still haven't been in, he hasn't been in a trade or, for 10 months or a year or whatever. Don't make that a big deal. Don't make that something you're focused on. Okay. That's irrelevant, honestly. And one of the challenges that we have as traders is keeping focused on, we're trying to know what we are as a market participant and look at good areas to buy and manage our risk. And there's so many different risks, right? Right? There's news risk, volatility risk, seasonality risk. There's so many different risks. And ultimately, all you're really trying to do is enter and exit properly. So let me back out on USD CAD, and you're a bull. Okay. Now you might want to be in something for 10 months. Okay. But that's not the real focus. Now look at this. M2 predicts this. Okay. This predicts that. Okay. And this area here predicts this area. So you could be in this for 90 days, but this is also wonderful. Okay. Okay. And looking on the other side here, you can see this is a sell zone here, which got you to there. This is a front run of this, which gets you down to here. This one didn't work out, but the next month it did. Okay, you guys see that? This is just swing trading, by the way. Please join FX Bootcamp. We're doing the swing trading group today. But notice this predicted that. This predicted that. This got halfway there, but this one worked. And this one worked. Okay. And this one took a long time, but if you entered the first day and exited the last day, it worked perfectly. Okay. It went a little longer. And now it's working the opposite. Okay. Now, the interesting thing about this, okay, is this period we were bears. This period here, I said you should be neutral. So here's the interesting thing. What's next? Are we going to start doing this in the future months? If the blue is happening, it's because we're repeating what happened over here. And that would be seasonal. This would be a seasonal move down. This would be a seasonal move, look, sideways, up, whatever. The thing is, will the current turn this way again? I don't know. But if you thought it did, this is the interesting, right? This is the interesting part. If you thought it could, if you thought it might, if you thought it will, how would you incorporate that into your technical plan today? That maybe September does something like this. Or the counter of it, which is this. How would you set that up? Well, a double top might work for plan A, and this would work for plan B. Plan A, plan B. Look, I just planned out summer for you. September. Now, can you see how this might address stress? Mohammed says swing trading is technical, yes. But what's not technical is knowing that this, knowing to do this. That's not technical, that's fundamental. Knowing that we were going to face a likely change, I don't know what the change is, but that in this period here, it will not likely be like the last period. That's not technical either. And that maybe we go and repeat what we were doing. Is that technical? No, it's not technical. Okay? Not technical at all. It's because you have to know, here's what it comes down to. Should you be buying or should you be selling? You don't know how to use these tools. So one of the things I like to show you guys is like that you make the decision first. Okay, so you could do position trading. Where is it? How come I'm not looking at it? There we go. Position trading bullish. Looks nice, right? Look, there's the target. Okay. And look at last month. Hey, it worked pretty good, huh? How about the month before? Hey, it worked pretty good, huh? So look at this. Here's our buy at 124. We're on our way to 130. What's the problem? Okay? If someone is, right, this is June, this is July, this is August. What's the problem? So if anyone just fell out of their seat going, oh my God, oh my God, oh my God, look at that. Oh my God. Then you need to join FX Bootcamp. If you're missing these trades, you need to join and learn how to trade. The interesting thing is, what will it do next? And this may not be the same as this, or this. And that's the fundamental side. I'm not talking about news. Okay? And this year's question mark is still the Fed. Not what will they do and how quickly will they do it, but more like how mispositioned and how fearful is the market, and what is their interpretation of what the Fed said is. And so there's a lot of uncertainty around that event. So I got to be cognizant of that and prepared for that, see it as a real risk, and be able to react properly, knowing that it may be logical, like this was, like this was, like this was. Look at these exits. Oh my gosh. Okay. But I have to also be open-minded that the currently rational market very quickly becomes irrational. Okay. So I handle that through planning. So plan A right now would be, as we tickle 128, will I see a reversal pattern? And am I ready, willing, and able to sell it? By the way, first week of August, not interested. Second week of August, not interested. Third week of August, Might happen. That is not a prediction. Okay? But do you think a bull do you think a bull should buy it at this price? What do you guys think? Should a bull enter a brand new trade right here? So then the next part of the thought process, if a bull shouldn't, should a bull take profit? How about that? See, if a bull, right, and the answer is maybe. Okay? Yeah, it's not that you shouldn't pick that top, but you should see it as risk. Okay? But here's the issue. If they do take profit, you will see something happen here on a small time frame. Maybe not on a 4-hour, but on a 15-minute. And what you do is you say, well, I'm going to trade it like it's a double top. I'm going to sell at resistance. I'm going to put my stop above that resistance. Okay? And the next part is if you're right, it'll come down to here. And if you're really right, bears will sell the retracement. Bears will sell the lower high. See, this isn't bearish. It's bullish exits. That's bullish fear. It's bullish concern. So take advantage of their fear. Hunt their stops. The first one is just you stop hunting. The second one, that's the market going short. Why? Oil prices are going up. Why? Global growth. Why? Risk on. Why? Seasonality. Will any of this happen? I have no idea. But it's my job to recognize what's happening. A bull can't buy here unless they're foolish. Hey, I thought 95% of the time the market is rational and efficient. Well, only an irrational, sloppy trader would be so careless to do that, to buy. So I'm going to say, no, they're not going to buy it. And if some take profit, red candle. And if you hunt stops now, creating more of a red candle, more stops get moved, more decide to take profit. Those that traded late at a high price, they'll get out early and quick. Bigger red candle, bigger red candle, bigger red candle, and then tomorrow you're swinging down. And so now tomorrow it's Friday and you've decided to sell USD CAD and you'll be short somewhere between 4 days and 4 weeks minimum. Or not. I don't know. Do what you got to do. Okay? But I think the long answer here is that's how I handle stress. Okay? You got to plan the heck out of it. You can't control your market, right? But you can control your behavior. And if you feel like fear is creeping in, be over prepared. That doesn't mean late and slow as molasses. But know what you're going to do before you do it. Okay? How do you prepare getting in the ring as a boxer or mixed martial arts fighter? You better train. Okay? This is competition. This is a lot like sports. Okay? You got to train. You got to train. You got to train. How do you win the Super Bowl? Hey, know the other team very well. Okay? Know the players. Know their strengths. Know their weaknesses. Know the coaches. Know how they will likely come out and play. And if you know they're not going to likely come out and play like they normally do, what do you think their surprises are going to be? Okay? And if that doesn't work, break one of their knees. Wait, I never said that. Anyways, peace on earth. May the pips be with you. May your profits be above average. See you tomorrow. Hey, if you're in my swing trading group, I'll see you today at 2 p.m. to plan out next week and the rest of the month. If you're not in my swing trading group, you go to fxbootcamp.com, you put money, and you get a whole bunch of videos. And then it'll say, hey, thank you for becoming a member of FX Bootcamp. Would you like to join the live group? Hey, the live group's $99 a month. It's not that big of a deal. Okay, we are going to plan out the rest of next week, the rest of August, and potentially September, October, November, December. This is probably the most important meeting of the year. So you're in or you're out. Okay? It's not a lot of money. That's all I can say. So you're in or you're out. You're in the team or you're not. Okay? You're either going to make it through the rest of the year with dozens of other people just like you that are laser focused, doing their absolute best, or you just stay amateur. I don't know. I don't know what to do. So, peace on earth. May the pips be with you. May your profits be above average. I hope to see you later today, guys. Cheers.